Okay, peeps, welcome back. So today, LTCN and BCHG does have appeared to have pulled back due to CPI. So with that being said, let's get it. So quick peek at what happened to the markets overall today as a result of the CPI. Is basically like pretty much everything pulled back. So again, why does the CPI matter? Well, first, before we get into that, so what happened? So it looks like core CPI did absolutely nothing, which is not good. We want to see this go down. I suppose doing nothing is better than going up. That's good, but the headline inflation went up 0.3%. That's roughly about a 10% increase. That is not good. So what does this mean? The more that these things go up, the higher the likelihood that the Fed's either not going to cut it all this year, which is not what the markets want to hear. Therefore, they sold off. Or even worse, they expect the Fed to continue hiking rates even more, which I'm not sure that they can even afford to do at this point, but that's debatable. So, what the markets really want to see is they want to see inflation come down consistently. No fake outs or scares like this in the markets. They just want to see it go straight down so the Fed can get to the rate cuts and the markets can be off to the races to the upside. That's what they want to see, and they're not seeing that, so they didn't like it very much and they decided to sell off, as you guys can see here. So quick peek, pretty much all of the futures are down with the exception of oil. Oil is inflationary. If it goes up, that means CPI goes up, so that's not good. Markets are going down. And I mean, again, they're not really going down that much. I mean, a 5,200 S&P is a record because the previous high was 4,800, so that's honestly not that bad. Crypto had a pretty steep pullback, but as you guys can see, it's recovering a little bit. It is the fastest horse in the race, so it's probably likely to price things in much faster than stocks. And some of the grayscale trusts did fall off and not really do much other than that. So anyways, LTCN's current price, 43.42. It could potentially appear that we are creating some kind of tweezer top pattern here. It's not played out yet. We still have 2 trading days, as you guys can see. So the support still remains between $23.50 to $27. No clear bearish signs on the indicators, the lower level indicators, or not lower level, I mean the RSI and the MACD. So as you guys can see, we are still struggling to get above this control bar here at $50. I did tell you guys that was a big deal. Number one, it's a control bar. It's the last capitulation bar of the previous bear market. And number two, this is also a major psychological level, $50, $100, $200, $500. Those are all going to be major levels, like $70,000 Bitcoin. That's a major level. Okay. So traders are going to be thinking about that and maybe wanting to look to take profits or short the market at those levels. And that's kind of what we're seeing now. If I pull back to the daily time frame, you guys can see that we're kind of chopping around here. So I'm not sure if we're going to go up or down. There's no clear bearish indicators yet. The RSI has had a death cross, but again, that doesn't really necessarily mean anything because we saw one down here and then it was kind of just a fake out. It ended up going back up anyways, so it doesn't really necessarily mean anything. So if you wanted to get in on the dip on this one, it might be wisest maybe to wait for it to get back to the supports. So I already told you what the support was. To get back up to the top of the control bar would be roughly about a 102% move. Now, if we're looking much higher up, the next level is going to be somewhere between 100 to 135 bucks. I have told you guys before that I think there's a possibility it could get stopped at least temporarily at $75, so we'll measure that too. So if this were to go to the $75 level, you're going to get about, from the support, roughly about a 200% gain or a 3x. And all the way up to that big resistance level up there, about 292% to about 433%. So a 4 to 5x, pretty good return on that move, assuming that the pullback happens and you're willing to wait for it. Now, BCHG is a little bit more apparent. So this one has actually pulled back, and it's pulled back quite a bit. It does appear that this resistance right here is going to hold. Of course, it could be a fake out. In a couple of days, we could be talking about how this thing popped out of resistance and it's going all the way up to $40. That is crypto. That can happen. As you guys can see, it was heavy support in the previous bull market. That's the reason why this is such a critical level at this point. So as of right now, I would say that this is still resistance. Okay, and then we'll talk about the resistance above that. But this current level right here is support. So 10.15 to about 12.5 or so is support, and then you have 18 to roughly about $20 as your resistance, and 42 and a quarter to about $60 as the range that right around where the previous cycle highs were. So from where it currently is to get back into the zone, you could be looking at as much as a 35% pullback. If you want to get in now, that's entirely up to you. We can go look at the lower time frames. As you guys can see, the price action has pulled back to between the red and the blue EMA. Last time we saw this, there was a huge bounce. Does it mean that has to happen again? No, there's no guarantees. But the one time that we did see this between BCHG at $4 and BCHG at $24, it did bounce between the red and the blue EMA on the 4-hourly time frame, so something to keep in mind. Also, very similar picture here on the daily time frame. So the one bounce that we had between $4 and $24, as you guys can see way up here, the bounce took place between the yellow and the blue EMA. And once again, we are between the yellow and the blue EMA. Again, that does not mean it has to bounce, but it's possible, okay? And the probability of a pullback is also possible because we've had 1, 2, 3, 4, 5, 6 green weeks in a row on BCHG. And 1, 2, 3, 4, 5, 6 green weeks row and on LTCN, which is, that's pretty substantial. We were really doing nothing for like a long time between the end of last year and roughly about the end of the first quarter of this year. And then we just took off. So, but anyways, as of right now, the current support is between $10 to $12.60. Resistance is roughly about $18 to about $20 there. And I'll reiterate one more time that the pullback could be as much as 36%. If you wanted to get in now, you could. And you could just DCA all the way down until we get to this zone. That's a possibility. So to get from the zone back to where we were, it'd be about 58% to about 76.5, and then all the way up to 107%. Now, if we're measuring all the way up to the next level from the current support, you'd be looking at roughly 265 to about 420%. So pretty large move on that one. I mean, if it gets up to $60 and you manage to pick it up down here at like, say, $12, I mean, you're talking about a 5x. That's a pretty good move. So HZEN, we're going to go over that one now. So HZEN, it is still holding as support. We are still retesting this area as support here. It's looking less and less likely that this is going to play out as a bull pennant. It looks more so likely that it's going to break down, which is a lower probability scenario, but it does happen. So if we get the bounce and we close back in the flag, then the flag target would be roughly about 1450. The resistance above us is 1130 to about 1230, and support below is $6.90 to $8. We'll just say $7 to $8, somewhere in there. So do keep in mind that the RSI has had a death cross. It doesn't necessarily mean anything. Once again, I will point this out. So got to zoom in here a little bit. But as you guys see back here, we did have a death cross right here or so on this kind of red candle here, and it had 1 week of pullback and then it faked out and it just went straight up. So I do understand that's a possibility. Doesn't mean it has to happen, but it could happen. So let me actually get these correct again. There we go. Okay, so as of right now, we're pretty much within the support box. So I would say now is as good a time as any to be buying HZEN. That's just my opinion, of course. But if we go from where it currently is to the next resistance, it'd be about 55.5 to about 70%. So pretty good move on that one. I mean, a 70. Look, I've told you guys this 1,000 times. When we trade traditional stocks, the average return that we look for in a swing trade is only 15% per trade. That's it. Okay. So one stock, one position, one trade, 15%. We generally trade 4 stocks at a time. So the total combined return would be about 60%. Obviously, all the trades would not play out at the same time. If they did, that would be kind of weird, but that just goes to show you that that return of 70% would be greater than 4 swing trades that we take. Okay, so that's definitely not a small return. So ETCG current support is between $13.10 to $16, and current resistance is about $17.70 to about $20. Again, there's a lot of major bullish confluence at this support zone. So you got the EMAs, the channel, the trend line, and the support zone itself all lining up perfectly in that support, which tells me that there's a very strong likelihood it's just not going to get below that level. Maybe unless there's some kind of black swan event, but I don't really see that happening. So if you wanted to wait to get back into the support, the drawdown would be about 23%. So it's 13 to about 1580, and then resistance is 1760 to about $20. So if you waited to get in, we'll just say somewhere around halfway between these EMAs, you'd be looking at about 24 to 41% on that move. So GXLM still within the bull pennant, hasn't moved. It's just kind of chopping around. We're retesting the support zone. So current support is $53 to about $59. Resistance is $72.70 to about $95.50. So if you wanted to get in now, that's up to you. You could just get in now, play it safe, and then DCA as it comes down. Do understand it can come down below that support zone. So 31% to about 70.5% to get back up to the top of the resistance. And when I say it could come back down below the support zone, it could break this pennant, break the support, and then it would kind of bounce somewhere in these EMAs. That's a possibility. So do keep that in mind. All right, ETH. So this is currently confirmed resistance because again, we had a candle close below the resistance. But we are still within the handle pattern from the cup and handle. The handle pattern target is roughly about $54. The current support is going to be right around 17 to 18 bucks, somewhere in there. Resistance 25 to about 29. The upper resistance is going to be 40.5 to about 47.5. So if you wanted to get in now, which is up to you, there is some risk involved with that. So it'd be about 17%. And then you could make as high as 63 to about 88%. And then if you wanted to wait to get up to this target pattern or this cup and handle pattern target, you'd be looking at about 109%. However, if you wanted to wait for the pullback, assuming it gets down to around 18, you'd be looking at 41 to 63%, and then 136 to about 170 to 173%, and then all the way up to the target up there is 212%. So massive potential moves here. Zcash holding resistance very firmly. This is a large red candle, so very bearish. Clearly, the sellers, however they were going about selling, they just decided they did not want this to turn into support. So as of right now, it is between $7.30 and $8, and the current support is $4.40 to $5. So if you waited for the pullback, which again, the support is right around where the EMAs are, you'd be looking at 57 to 73%, and then all the way up to that wick high, roughly about 120%. So pretty good move. Again, do keep in mind that we did have a golden cross back here. So these are rare. These are very, very rare signals on the weekly time frame. And that's a very bullish indication. As a matter of fact, I can show you guys the last time that we even had one on here. Never actually even existed, as you guys can see, because the fund is still relatively new. So this is the first time that we've ever had one on the Zcash chart. So very, very rare indicator indeed. GSOL, again, chopping around. It's coiling up, could go up, could go down. If it goes down, do understand that there is a lot of risk at this level. The drop could be huge, could be as much as 57%, and that would not even, or yeah, I guess that would actually get all the way back down to the previous candle highs. So yeah, about 57%. I would not buy this until I got to between 175 to 200. That's just me. You guys can do what you want. But if you wait for that level to get back up to the high, is roughly about 210%. So Mana, this one is finally making a move. It is having a confirmed breakdown. As you guys can see here, it does look like it wants to go lower. So unfortunately, the ascending triangle pattern, at least until the end of the week. Has not confirmed the bullish. We also don't know if it's yet confirmed bearish either because we still have 2 trading days left. Like I told you guys before, I would start getting in somewhere around 26 bucks. That would be the entry I'd want to take, and then maybe potentially as low as somewhere around $20. So 20 to 26 should be a pretty sweet spot. And if you wait for roughly about half of that area, you'd be looking at a 193% move. And do understand that from the current price to get just to the $26 level is still about another 24% drop from here. So GBAT, not doing much of anything, still coiling. Don't know what it's going to do, at least not yet. So to get back to what I would consider to be a buy area, which would be somewhere around the top of these candles at $10, it'd be about a 52% drop. If you wanted to wait for that, which is your choice, you'd be looking at about 228%, so pretty large move there. G-Link, this one does look like it actually wants to sell off a little bit, so still have a couple of days to confirm this, but if it does sell, I suspect it's probably going to get stopped probably somewhere around the top of this range. So $83, it could come down to the bottom to 66. I would say 83 is probably a likely area where it's going to stop. So just to give you guys an idea of how much of a move that could be, it's about 26% down. If it goes lower than that, to the bottom of the support, it'd be about 41.5%. And let's just say you got your average somewhere in the middle of the zone. To get back up to the all-time highs, you'd be looking at roughly about 195% move. FILG, this is very, very hard to read. It does not look like it wants to do anything. It's just kind of up and down like gold. As a matter of fact, we had the worst, or not gold, I mean silver. We had the absolute worst time trading silver this morning. I can show you guys that right now. And what was really garbage about this is one of the best moves of the day we did not get to trade because the internet crapped out right as we were about ready to buy the dip here. And you guys could see it would have been a 50-cent move, which is about $2,500, and we didn't get that. And then after that, it just kind of did pretty much what Phil G looks like it's doing right now. So not great. But I would reiterate once again, I think if this thing is going to pull back to somewhere, it's probably going to stop somewhere between, I'd say about 71 to maybe this wick high here, so about 120 bucks. And again, if it does pull back that far, so you could be looking at a minimum of 37%, maximum of about 60%. If you waited, and let's just say you got your average down to like, I don't know, maybe like $100 or something like that, the move would be pretty large. Let me actually remeasure this. So from $100 to the high up here, you'd be looking at about 280%. So that's a really, really good move. GLIV, once again, it's coiling, not doing much. I'll say the same thing I said last time, which is I think that a good price to buy at is somewhere between 26 to 28. That's not financial advice, but that is where the bottom of these wicks and the top of these candles are, which would make sense. If it comes down and it stops somewhere as support, it would stop down there. So from that point to the current high would be about 185%. And I say that would be a good area because you guys can see these very long wicks down here, roughly around the top of those candles. That indicates massive, massive buying pressure. That's what happens when you get wicks to the downside. Buyers step in and they basically suck. They eat the price back up, and then it just shoots straight back up as a result. That's very bullish. So anyways, this is LTCN and BCHG. And the grayscale trusts appear to have pulled back on the CPI data, so we will see what's going to happen in the coming days. Anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.